Let's talk about something that gets pretty much every investor excited: consistent, growing dividends. What if I told you there's a company that's basically a global engine, almost purpose-built to do just that? Well, today, we're diving deep into Mitsubishi Corporation to see exactly how this dividend machine really works. 8. That's the number. For 8 straight years, Mitsubishi has hiked its dividend. Now, in today's, kind of crazy market, that level of consistency is, well, it's really rare. It's a huge signal of financial health, and it's exactly the kind of thing that makes long-term investors sit up and take notice.
So, how do they pull this off? Here's what we're going to cover. First, we'll establish why they're considered a dividend powerhouse. Then, we'll peek under the hood at their global business engine. After that, we'll decode their payout blueprint, see what's fueling their future growth, and finally, touch on why some of the biggest names in investing are paying close attention.
All right, let's get right into it. What's the foundation of this reputation? Well, it's not just one thing, but a really powerful combination of absolutely massive scale and a very, very deliberate strategy.
Plenty of companies are huge, but very few of them pair that kind of global scale with an explicit public commitment to delivering consistent returns to their shareholders. And that laser focus on stable, growing income, that's what can make a company like this a potential bedrock for an investor's portfolio.
Okay, so if they're so committed to paying out, where does all that cash actually come from? The secret sauce here isn't in one single business, but in this incredibly vast and diversified global engine they've built over decades.
Just take a look at this chart. This really shows you the built-in stability we're talking about. See the mix here? You've got metal resources, natural gas, the food industry. All of them are major profit centers. What that really means is, if one sector has a rough year, it doesn't sink the whole ship. The other parts of the business can just pick up the slack, and that's how they keep the cash flowing so consistently.
Let's get a bit more specific. A huge chunk of their energy business is liquefied natural gas, or LNG. We're talking massive projects all over the globe, from Australia to Canada. They're literally supplying the energy that powers entire economies, which makes this a super reliable, long-term profit machine for them. And then you have their metal resources side. Their reach is just incredible. They're sourcing essential commodities like copper from Chile and the coking coal needed for steelmaking from Australia. This kind of immense scale forms another massive pillar of their financial strength. And it's not all just heavy industry, not by a long shot. Mitsubishi is also a huge player in the global food supply chain. A perfect example is their company, Cermaq, which is one of the world's leading salmon farming operations. This connects their complex global business directly to what might be on your dinner plate. So, what's the best way to think about this whole model? It's kind of like buying a globally diversified fund of essential industries, but with a really key difference. Mitsubishi doesn't just own these assets, they operate them. They're hands-on. In Japan, this unique model is known as a Sogo Shosha, and it gives them this deep operational insight and control.
Okay, so we see how they generate all this cash. Now let's look at why that cash consistently finds its way back to shareholders. This isn't just by chance. It's official company policy.
The key phrase you absolutely need to know here is progressive dividend. It's basically a public promise from the company to either increase or at the very least maintain the dividend every single year. For an investor, this policy is huge. It removes a ton of uncertainty and signals a real commitment to predictable, stable income.
And here is that policy in action. This isn't just talk. The dividend has more than doubled in just 5 years, climbing from 50 yen per share to a forecast of 110. This isn't some promise on a piece of paper. It's a proven track record of delivering cold, hard cash to shareholders.
And it doesn't even stop with dividends. They've also announced a massive, and I mean massive, 1 trillion yen share buyback. Taking their own shares off the market increases the value of all the ones that are left. It's just another powerful way they're returning capital directly to investors.
A great track record is one thing, but as an investor, you're always looking to the future, right? So where is the growth going to come from to keep this whole dividend machine running? Let's take a look at their strategy.
Their future strategy is pretty simple to remember: enhance, reshape, and create. They're going to enhance their core profit centers like LNG. They'll reshape their portfolio through smart acquisitions, and they'll create entirely new businesses in cutting-edge areas like biofuels to power that next wave of growth. So in practice, this means they're doubling down on what they call energy transformation, or EX, that's both expanding LNG and investing in new things like sustainable aviation fuel. It also means a digital transformation, or DX, using tech to make their global supply chains even more efficient. And it means continuing to grow reliable businesses, like expanding their salmon farming operations.
The internal story here is compelling, for sure, but what really validates the whole strategy is who's taking notice on the outside.
Let's be honest. When Warren Buffett invests, the world listens. His firm, Berkshire Hathaway, has taken major stakes in Japan's big trading houses, and that includes Mitsubishi. Buffett's public enthusiasm to expand these investments is a massive vote of confidence in their entire business model.
And if you put them side by side with a key rival, Itochu, you can see the difference. While Itochu shows a higher return on equity, Mitsubishi offers a significantly higher dividend yield. With a pretty similar valuation, this really reinforces Mitsubishi's specific appeal as a powerful, income-focused investment. So let's just quickly recap the 3 key takeaways. 1. You have a diversified and resilient global business engine that can weather economic storms. 2. There's a clear public commitment to increasing dividends year after year. And 3. They have a solid strategy for future growth that's focused on energy and digital transformation.
So, in a world that feels more and more uncertain, the appeal of a resilient global business with a clear policy of returning cash to its owners, well, it's pretty hard to deny. Which leaves us with a final question. In the search for long-term growth and stability, could a company like Mitsubishi be exactly what your portfolio needs?